try my running into the screen real quick to get you to click or not click off and say, man, I gotta tune in to this guy. Who is he? Welcome. Thank you for coming through. Shout out to you. For those of you who do not know, my name is Leroy and I have an extensive, come on, say it with me for those who've seen the videos before, an extensive knowledge and background in what? Come on, this is on the test. I'm giving away grand prizes for the people who know the answers. In banking, financing, I thought that was the same thing. It doesn't have to be. Lending. But shout out to you, my small business owners, my entrepreneurs, my aspiring investors, my aspiring entrepreneurs and small business owners and CEOs, shout out to you. In this video, I want to talk about the benefits of going the financial institution route, which is banking, instead of partners. Yeah, like partnership investors and things. And now everybody's situation is different, but I just want to go over 3 of the main benefits that I have discovered, and a lot of the businesses that I have helped also will attest to this. These are the 3 benefits of going through a bank versus getting an investor or a partner. Number 1, let's start off with the main one. Number 1, ownership. You are able to retain ownership because when you get, let's say your business needs capital. In order to raise capital, you have options. You can go to a bank, but you can also get an investor, or you also can get a partner. Okay? A partner is, hey, come partner here with me and we'll do it this particular way, which is very similar to the investor. But when you do it with a bank, they're not asking to get a percentage of your business. Now, they want a percentage of the money, okay? They want a percentage of the money, but it's only over a certain period of time. You don't have to worry about forfeiting any portion of your business ownership. So you retain ownership, which is important because if you have things you want to do and you are the primary owner, you set the rules. If you say, man, I want to turn this business into this particular direction, you can do it. Like, they can't tell you no. But if you had an investor, you may have to run it by the investor depending on the part of the ownership that they own. Okay? So, number 2, and this one is very important also. A little quicker. It's a little quicker. And it could be cheaper on fees. This is what I mean. When you get another investor, you're going to have to pay to get legal documents drafted and all of these kind of things as well too. In the time period of coming to the agreement, as well as discussing this is a setup. Then, you know, I get this, and if you do this, and who got control of this. But if I tell you this first, but then you didn't tell me, then you don't get all of those kind of things. But the banking, the only fees you're really paying is the fees that's associated to your particular request. All right, which is a little bit more spelled out versus the attorney fees that you're going to have to pay in regards to getting an investor. All right, the reason why I'm mentioning these things here, now all of these things in a vacuum, it just depends on the person's situation. But a lot of businesses I've seen, they don't really need investors. They don't need partners. All they need is the money for their business. Like, they got the ideas, they got what they need. All they need is the money for their business. And you don't want to have to forfeit your ownership. You don't have to forfeit your say-so. You don't have to forfeit the direction of your company just in order to get some capital, okay? Because when people give you capital, when it's an investor, so they begin to have more of a say. They like, hey, listen, it's my money. You know how it is. They come in. I see what you're doing now. I don't think that's going to work. I think you need to do it like this. You know, remember, I put that money in there. And you're like, man, I put all of my time, my equity and things into this. Let's keep moving on. And number 3, which is also important. Quick recap. The ownership part. Then the 2, the timing and the fees part of it. And 3rd, it is difficult to unwind. Yeah, like it's difficult to unwind. When I say it's difficult to unwind, what I mean is that the period of time is long. Like, you needed the money because it was more short term. But now they're investors for life. And you actually now have to buy them out. And you know what they're going to want. They want their money and some. Let's say they put $500,000 in order to be a 20% owner of your business. and you're moving along and you got some capital and you're like, listen, I want to, this was always a temporary idea for me. I don't want to have 20% of my business owned by someone else. I had plans for this ownership. So I'm going to go to them and I'm going to buy back my ownership. They may say, oh, that's great, but things is going good. You know what? I don't think I want to sell. They're not obligated to sell, which means that they can keep ownership as long as they want to keep ownership. Let's say that you are able to convince them and they're like, okay, fine. I tell you what, $1 million. And you're like, hey, now I know the business is worth more, but $1 million, you only owned it for like 5 years. You mean to tell me $500,000 that you gave me and we was able to help grow the business, I now have to pay you $1 million for the same ownership? They're like, yeah, this is a valuable company. We've done well. Now that could kind of touch you a certain way because you're having to pay more money back than you would have if you was able to do a deal that maybe was a 5-year term for that $500,000. So you know how much you're going to have to pay on the front end versus having to try to figure it out on the back end. Because on the back end, it looks like whatever number pops up. But on the front end, you're able to know, listen, I'm borrowing this $500,000 at this particular rate. At this interest, this is how much I'm paying. But if I give a portion of my business away for an amount, I don't know how much I'm going to pay in the future. So those are the top 3 things. I hope I put some on your mind. All right. As I mentioned before, everybody's situation is different. But what I do see a lot of is small businesses. I see entrepreneurs. When I say small businesses, and you'll be surprised about this, small business is known as any business under this certain threshold. Matter of fact, let's throw the threshold on the screen. Now, be cool if I do it with the snap light. Bam, like it, yeah, let's try this hand. So, I need to look at the camera when I do it. That's it. Most of these businesses, they don't have to have an investor. Really, they just need the capital for their business. And they don't want to necessarily have to tie up where they're going on their business just to get this particular capital. So keep this in mind. So in the future, if you're like, I need some capital for my business, and you want to try to figure out what avenue should I go, I'm sure you can look back at this and it's going to help you out. Shout out to you again. I'm going to see you on the next one. Is that good? Is that cool? Hey, shout out.